Hello traders, and welcome back to Explain the Charts. Today is October 7th, 2025, and we are doing a deep dive into Alphabet, ticker symbol Google. The stock is seeing some significant movement today, so we're going to break down the latest news and then move into a detailed analysis of the charts to see what they're telling us. First, let's cover the news, because there's a lot of conflicting information driving the sentiment right now. Fundamentally, there are strong reasons to be bullish on Google's long-term prospects, particularly with its advancements in AI and cloud computing. HSBC recently initiated coverage with a buy rating and a price target of $285, citing that AI growth potential. Furthermore, the company scored a massive legal victory back on September 3rd when it avoided a forced breakup in its major antitrust case, which was a huge overhang on the stock. Google's strategic acquisition of Wiz for $32 billion is also a major move to bolster its Google Cloud security offerings, which is another long-term positive. However, the short-term picture is much murkier. We're seeing headwinds from other legal battles, like setbacks in its Play Store antitrust case, which have been cited for recent price dips. There are also persistent worries on Wall Street about the high costs associated with generating AI-powered search results and how that might impact Google's bread-and-butter advertising business. Today, the stock is down about 1.74%, trading around $246 amidst some broader market uncertainty, which might be linked to the ongoing government shutdown. So we have a classic battle: strong long-term growth potential versus significant short-term uncertainty and legal risks. Now, let's see how this narrative is reflected in the price action on the daily chart. Looking at the bigger picture, Google has been in a powerful uptrend since its 52-week low of around $140 back in early April. The stock has made a series of higher highs and higher lows for months, which is a textbook bullish structure. Let's zoom in on the action since the beginning of September, because this is where the story gets really interesting. Right here on September 3rd, you can see this massive green candle and a huge gap up in price. This is a direct reaction to the news that Google would not be forced to break up its core assets in the antitrust ruling. The price exploded from the $211 level to over $230 overnight on extremely high volume, which shows massive institutional buying pressure. This event propelled the stock into a new price territory. Following that news, the stock continued its rally, eventually peaking at its 52-week high of $256 on September 19th. This $256 level is now the most critical resistance level to watch on the chart. Since hitting that peak, however, the price has been in a clear pullback. We've seen the stock struggle to hold its gains, and today's significant red candle shows that sellers are currently in control. This price action suggests a period of distribution after the major run-up. Now, let's talk about key support zones on this daily chart. The most immediate area of minor support appears to be around the $240 level, which has been tested a couple of times. However, a much more significant support level lies at the top of that September 3rd gap, roughly in the $230 to $232 range. If the price were to fall and fill that gap, it would be a very bearish signal in the medium term. For now, the battle is being fought to stay above the more immediate $245 support. Switching over to the 1-hour chart, we can see this recent downtrend in more detail. Since the peak at $256, the price action is a clear staircase down, defined by a series of lower highs and lower lows. This is a classic bearish trend structure in the short term. Any rallies have been sold off, indicating that sellers are defending key levels. The most immediate overhead resistance on this time frame is the previous day's closing price around $250.43. Above that, the $252 area has acted as a pivot point and will likely offer resistance as well. Support is currently being tested at today's low of $245.61. Now let's drill down even further to the 15-minute chart to analyze today's intraday action. The stock opened around $248 and saw an initial push higher, attempting to reclaim the $250 mark, but it failed at a high of $250.44. After that rejection, We saw a very strong and sustained sell-off for most of the trading day, bringing us down to the low of $245.61. This pattern shows a clear intraday victory for the bears. For day traders, a break below this $245.61 low would signal a continuation of the downtrend, while a strong bounce off this level could offer a short-term buying opportunity. So, let's go back to the daily chart and recap what we've learned and what to look for. The key takeaway is that Google is at a critical juncture. The long-term uptrend is being challenged by a strong short-term downtrend. To summarize the critical price levels, your major resistance is the all-time high at $256, with minor resistance levels at $250 and $252. On the downside, immediate support is today's low around $245.61. Below that, the next significant support is at the psychological $240 level. The most critical, must-hold support for the bulls is the top of the gap from early September, around the $230 to $232 area. Now for some unbiased predictions. The bearish scenario seems slightly more probable in the very short term, let's say a 60% likelihood. Given the bearish momentum, a break of today's low at $245.61 could easily lead to a test of the $240 support. This scenario would be reinforced if the broader market continues to show weakness. The bullish scenario, with a 40% likelihood, requires the stock to build a strong base of support right here above $245. For bulls to regain control, they need to push the price back above the $250 resistance level with conviction. Positive news regarding AI monetization or a resolution to legal issues would significantly increase the likelihood of this bullish case playing out. Looking ahead, keep a close eye on the upcoming earnings report, as analysts are projecting significant year-over-year growth. Any updates on legal proceedings will also be major catalysts. Ultimately, the chart is telling us to be cautious. The bears have short-term control, but the bulls still have a strong long-term structure to defend. That's all for today's analysis of Google. Please remember, this video is for informational purposes only and is not financial advice. Always conduct your own thorough research before making any investment decisions. If you found this breakdown helpful, please hit the like button, subscribe to explain the charts, and we'll see you in the next one.